Good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah, and it's not the day that will set the stage on fire really from a trader's perspective, at least on the index, but things could happen. So first, the news. Uh, the jobless claims were better than expected, but that did not do too much to the U.S. markets. Maybe on account of the fact that there is no consensus right now on the stimulus, but otherwise, so U.S. unemployment claims fell more than estimated. However, if you look at what the markets did, even on an intraday basis or otherwise, you will see that there wasn't any big dramatic upswing or downswing in the US markets yesterday. They kind of were tempered throughout the trading day, maybe slightly less than what the European counterparts did, but they were a bit tempered, and which is why the Dow, S&P, Nasdaq pretty okay, really. I mean, there are a bunch of these data points as well, which show some fairly interesting uh, news points about or inferences about what's happening with the markets. The S&P 500, for example, is now with this up move very close to its record highs. I mean, the Nasdaq has done that enough number of times in the month of July already, but the S&P 500 out there with the all-time highs, and that's pretty interesting. So that's what the US markets did, but I mean, marginally higher, if you will. But Asia is kind of quiet. I think the Japanese economic data or some other markets economic data also likely to come out, and ahead of that data, Asia is a bit tempered today. The SGX Nifty is a bit tempered today as well. Look at that, 1.29% lower for the HSI, possibly trading at the lower point of the day. The other markets too aren't exactly great. I mean, just about quiet to marginally lower. The SGX Nifty, the last time I checked on my mobile was flat. So hardly any movement there, about 0.1, 0.2% lower. So yeah, that's the trade that we're looking at. Now, what's the trade setup? I think, I mean, I don't know why. May call it a gut feel, or maybe because of the reasons that I'll just tell you. I think there is an outside chance of the index maybe surprising on the upside later today. Now, why do I say that? One, there has been 4 days of positive market breadth, which is very conducive for stock specific activity. Keep that in mind. India Wix, the dollar index, all of them have slid, and that augurs well for the short term from a bull's perspective. And keep in mind, from a technical trader's perspective or stock specific trader's perspective, about 635 non-FNO stock circuit filters have been revised upwards. I mean, I know there's a lot of conversation on Twitter and otherwise. Some people are calling this Kalo India, Kalo may well be the case, really. But all I'm trying to say is that from a stock specific perspective, there are enough and more things around for you to play around with, and in a good way. I don't mean just from a gambling perspective, from a good way, trade around with, even if the index is flat. What you need is the index to not really be unidirectional in a major way, from a long or a short perspective. So there might be a perfect day in that perspective. Earnings wise, Mahindra and Cipla from the large cap space, and Cipla kind of rounding up the pharma numbers. Nobody's come out already. Remember late last night, and Bata, Balrampur Chini, Mahanagar Gas, and a few other very interesting mid cap names. The reason I think Balrampur Chini might be interesting because sugar companies, Dhampur and the other one that came out with numbers, I don't quite remember the name, late last week. Both of them came out with some really good set of numbers, and therefore it'll be interesting. The sugar EBIT was very interesting for most of these companies, and therefore it'll be interesting to see what Balrampur Chini does in the session today. However, the stocks to watch out for, and I, I mean, I think AI Industries is your stock of the day. Now, it may well behave otherwise, but I think that numbers were so good that it will be interesting. Now, look at those numbers that I'm putting out for you. Revenues at 745 crores, the estimates were 586 crores. Net profit 36 crores, an estimated net loss of 9.2 crores. They've done a profit of 36 crores. Margins 9.7%, estimates were 3.8%. Of course, EBITDA naturally was 72 versus 22, and which is why the margins have shot up so much. Just very strong. And frankly, even if you strip out what the estimates would have been, the expectations and margins were 10.6. They have done 9.7. So pretty interesting, both in terms of what was estimated and what has been delivered versus what was done and what was delivered. And which is why I think KEI could well be your stock of the day. So do watch out for this one. I think there's some disappointment in Deepak Nitrite, and maybe the stock could correct because it's had a very heady run up not immediately ahead of the numbers, but in the last few weeks, we talk about it so much. Now, the news first and then the results. The news is that there's an arm, Deepak Phenolics, which is expanding its capacity of production of IPA from 30,000 to 60,000 tons per annum. It's expected to be commissioned in the first quarter of FY22. The reason why I'm saying this is important, because IPA is the one that is used in hand sanitizers, viewers remember. That's what led to great results from Deepak fertilizers as well, and that's what saved the day for Deepak Nitrite. So it's balancing act. I mean, if one thing doesn't do well, DASDA doesn't do well, IPA does well, and I think that is what done well. And I think it is kind of de-risking the business model in a meaningful way from seasonality, and which is why I think it's very important. But the numbers were a bit uh, weak. Revenues were down about 35%, net profit down about 24%, margins did okay, actually better than expected. For a stock which is done so well, maybe the market expected a lot and that hasn't come out. Maybe quarter two would be normal too. I think the stock would correct it. Vodafone Idea. Now, I've divided these numbers into some negatives and some positives from Vodafone Idea's perspective. Now, the negatives first, and I think EBITDA adjusted for Ind AS and one-offs was down 10%. So don't look at other factors. Adjusted EBITDA was down 10%. ARPUs had dropped from they're down to 114 from 116. Imagine every other company has shown a marginal uptick in ARPUs. Vodafone's ARPUs have come off, and why? I think one of the reasons could also be that the 4G subscriber base, which is the main subscriber base from which a telephone company these days is making the higher ARPUs, has dropped from 10.56 to 10.46 crores on a quarter-on-quarter basis. So this is not great news. And I dare say, I mean, the wide loss, the large loss, also is a bit of a worry. Of course, there's reason for it, right? The AGR provisioning, and now with that loss being taken, the AGR provisioning is complete, which is actually a good thing. The cash position improved by nearly 1,000 crores, most probably due to lower capex. But the point being that the negatives, to my mind, outweigh the positives for Vodafone Idea. And all of this is hinging now on what the eventual verdict will be. But somehow, it's not the most encouraging set of numbers. Bharti didn't do that great, even on half decent numbers. These are very poor numbers. I don't know what Vodafone would do. HPCL, on expected lines, the numbers are good, but revenues at about 37,720 crores. That versus estimates was very low. But remember the management had spoken about inventory gains. I mean, that's I think led to this. Net profit 2,800 crores. The estimates of 1,523 crores. There's an EBITDA gain of 4,354 crores. The expectations were about 2,635 crores. And the rise in net profit, of course, essentially due to the inventory gains, despite very weak GRMs. So revenues bad, GRMs bad, but EBITDA and net profit doing well due to inventory gains. Let's see what the stock does. Last but not the least, in terms of stocks, actually, last couple of stocks, let me go through them very quickly. Firstly, Pidilite. It was expected to be a bad quarter. It's turned out to be a bad quarter, but for the margins. But just look at that. For a market leader, revenues were down 56%, net profit was down 90%. At 26 crores, the estimates were 29. It's coming down at 26. So that bad performance by Pidilite. Margins completely demolished. I think the management call would be important, but I dare say this is not the best of numbers. Maybe the stock will react negatively. Not the least, Jubilant FoodWorks viewers. The reason I think it's important, it's forayed into the FMCG category with a range of ready-to-cook sauces, gravies, and pastes. Now, a lot of people are writing a lot of things about it, about why this is an interesting move, but why this is not that big a move as well. Here's my two bits, the points to note when it comes to Jubilant FoodWorks. One, it's not a large market size, and but it's good to test within it's good to test small as opposed to test large, which is important. This could actually provide the company with a long-term alternative to dining revenues. It's predominantly a dining revenue company, but this could provide the alternative. And a strong brand franchise may actually help Jubilant do well in this space, and maybe other products could follow suit. So it's interesting move from that perspective. Do watch out for Jubilant. Last but not the least, in the very extended trade setup today, what stood out for me is this. Everybody's talking about fans and Tesla, etc. Look at this stock. See, that one has actually outperformed all the companies by huge margin. This has been going around since yesterday, but for a lot of you might not be knowing about it. Look at this. Around Tesla fangs over the past 18 months. Want to know more about it? Log on to BloombergQuint.com or Bloomberg.com and read more about this. But that's it on the trade setup. Have a profitable day ahead. Watch out for an unlikely surprise from the index towards the second half of it. I don't know why, but it could happen. Take care.